What's good, everyone? Jerry Trades back here with another video. Um, Today's just gonna be a market study. I'm kind of experimenting with this. I don't know if I'm gonna do it every single day, but honestly, I think it'll be very helpful for some of the people out there who understand concepts, right? Understand all the concepts I use, understand a lot of ICT concepts, but don't exactly know how to put it on the chart, right? It's very easy to learn ICT concepts, right? Fair value gap, you can probably learn that in like 10 minutes, right? But understanding the proper narrative, the proper context, the proper daily bias is something that's very difficult. And this is what I'm trying to do to help you guys out, right? So to kind of show you like how these apply to what kind of market, what fair value gap you should be focusing on, what liquidity points you should be focusing on, and so, right? So today we had a very bearish day, right? And we can kind of start on the 1 hour, right? So let me just turn off all these executions. But basically today on Monday, we don't really have any weekly profile, right? If you know my model, right? I taught this I basically already done with my entire model, right? The first thing we have to look for is a daily profile, right? Obviously, it's a Monday, so it's very difficult for us to frame a daily profile, right? So really, we didn't really come into too much contact with Friday's high or Friday's low, right? So there's really no way we could really frame a daily profile, right? Coming into the day. So what's our next best thing? Our daily profile, right? So coming into the day, I'm looking for a higher time frame key level on the 1 hour or 4 hour to kind of show us, kind of see like, oh, where is our possible reversal points, right? So as you can see on our time frame, right, we have this massive 1 hour fair value gap, right? We have this massive 1 hour fair value gap. But my focus was more towards this 1 hour intermediate term high, right? So this is a 1 hour intermediate term high. And the reason why it's an intermediate term high is because it's a swing point resting inside of a fair value gap, right? So honestly, like, it doesn't really matter about intermediate term highs. You can also just consider this as a 1 hour high. I personally really don't use that kind of stuff, but it's just something to kind of show. The reason why I use this is because this is also inside the fair value gap, right? So this is just cleaner. So coming into the day, we move up, right? We also had this 1 hour swing low get rated, right? So this is a 1 hour. Oh shit! What the hell? This is a 1 hour low. Now, why? Like, honestly, like, some people were like, honestly, who understand daily profile are like, this is a London reversal. And obviously at the time it was, right? When I was coming into the morning, I was thinking, oh, this could actually probably be bullish, right? Because we have all of our criteria, right? 1 hour low, we have a change in state delivery, right? But what made me change my bias? That's the thing. Well, first of all, 8:30. So 8:30 is New York kill zone. So NYKO is New York kill zone open, right? So ideally, what you want to see is you want to see price move lower and then move higher, right? Because our overall draw is higher, right? So we also have this 15-minute high in relationship to this 1 hour high, right? You can also claim that the reversal came off from here, but it's whatever, right? The reason why is because we had a very strong close, right? We can see how New York manipulated slightly higher, right? Past this previous candle's high. We manipulate slightly higher and then move lower. But the primary key opening time was 8:30, right? You can clearly see 8:30 expand higher, taking out this 15-minute high, right? And this 1 hour high. And then we move lower. We have a very strong displacement, right? Very strong displacement, which shows that smart money is in, right? Smart money has bought above this opening high, right? These key open highs, right? They have used all the stop losses piled around these liquidity pools right here to be able to fill in their massive short positions, right? Now, so based off of this context, right, this is a double purge. So what a double purge is when, so clearly we are bearish, right? So when we are bearish, a double purge consists of when a low gets taken, right? So people think this is a liquidity sweep, right? And I thought this was too, right? I thought this was the liquidity sweep for us to move higher, right? And it was, and smart money tricked people, right? People are buying all along here while smart money is selling. They're taking their buy positions and they're matching it with sell positions, right? So coming into 9:30, right? What really made me like kind of change bears, right? So first of all, it is this 15-minute change of the state, right? But the other thing is this right before 10 a.m. we take out London's protected low, right? So this is a true invalidation area of where we don't want to be, where we don't want to be bullish no more, right? I don't want to be a buyer when I don't have a protected low anymore off of midnight opening price, right? Because we have a protected high above midnight opening price. This is very strong, clear displacement, right? And we taken out our last, I would consider this to be like the last level of defense, right? If smart money is not willing to buy below midnight opening price, I don't believe that they're going to be willing to buy anywhere else, right? Unless there's like 10 a.m. news. But so far it's been very bearish, right? So coming into the day, I came around the charts around 9:30, right? So 9:30 we moved lower. I see all of this, right? And we take out London lows around 9:55-ish, right? So what I'm thinking is, okay, so this high is obviously clearly protected. We have strong displacement away from it, and we have our change in the state delivery right here. So this is our protected high, right? So I'm just looking for a simple continuation. This is a 5-minute SIBI, right? This is a 5-minute bearish for rally gap. And it's very simple, right? Very simple. Price comes into it. This is our retracement phase of price, right? In a retracement phase of price, we expect price to fill in imbalances, right? Because expansion is not efficient price delivery, right? Price runs, creates imbalances, right? So that's why there's a retracement phase of price, right? The retracement phase of price is so the market can fill imbalances, right? Each phase of price has their specific things that they have to do, right? Expansion targets liquidity, right? Because when we're expanding it, we're taking out all this liquidity. Consolidation is to engineer liquidity, right? So we can have fuel to, reverse. Reversal is obviously when smart money buys or sells, buys or sells dumb money's positions, right? So dumb money buy, smart money is usually selling at a reversal, right? And then retracement is to fill imbalances less by expansion, right? So 5-minute SIBI, we move lower, and we have a change in the state, right? Our change in the state is this up close candle, not this up close candle. The reason why is because from this price light, which is this swing point, to this swing high, this is the change. This is the one up close candle that created it, right? And we have a change in state. Now, this is a very inefficient, very difficult stop loss position, right? Because the order block is relatively large compared to the candles around it. You can kind of see how this is relatively large. Also, where is our drawn liquidity, right? So my primary drawn liquidity was right here. It was this previous week's low, right? This is previous week's low, right? This is what I'm considering to be my strong draw on liquidity, right? It's a time-based level, right? Last week, buyers stepped in and pushed price higher, right? And clearly some of those last week sellers also pushed price higher to this high, right? So a lot of people have went long somewhere around here, right? A lot of people went long. So their stop losses are all somewhere around here, right? And they're writing the positions, right? And as they're buying, once again, right, smart money selling, they're taking all their orders, right? And eventually they move price lower. So I know a bunch of their stop losses will be somewhere around this low, right? So that's what I'm targeting. However, the problem is that it's not very efficient, right? The stop loss isn't the best. If we do a classic stop loss of just entering when the thing closed, and we put it above the body, our risk to reward is 1-to-1. And this is obviously not very favorable. So the plan is to take it to the mean threshold, right? So the mean threshold is 50% of the order block's body, so it'll be this, right? And if we shrink our risk to reward down here, all right, this is a long position tool, that's why. Oops. If we short this, right? So our classic risk to reward is 1.5, is like 1.31. That's not very good, right? I want at least a 1.5, ideally 2R. So if we shrink our stop loss to right here, right below the 50% level, our risk to reward becomes much better. And I'm cool with taking the stop loss because there are other things that make me think that like price is not going to come up here anymore, right? So price. So the reason why is because we have imbalances inside of this entire price leg, right? We have this suspension block right here, which is basically two volume imbalances, basically. So this is a suspension block, right? This should protect us, right? And it does. It does protect us. And the thing is that, like, since this risk to reward is really bad, I'm cool taking a loss somewhere around here and getting a propulsion block, which will give me better RR. So something that could happen is that price would move up. So price would move up, take me out, right? And then it will move slightly lower, giving me a propulsion block right here, right? And when there's a propulsion block like that, I would get a much better risk reward. As you can see, I would probably get around maybe a 1 to 3 risk reward. If I entered here, I have a 1.65. So just moving it a little bit gives me a much better RR. So that's why I'm cool taking the loss, because as long as my idea is valid, I'm cool taking a re-entry, right? So this is our draw on liquidity, our previous week's low right here. And we eventually take it, right? And, you know, I just took off all my position here. I did not feel like taking any like runners or anything, and I probably would have been stopped out somewhere around here if I did leave a runner, because since, like, you know, this trade was already, we were already in pretty deep discount. I wasn't really willing to risk too much on this position, but still it was a very good trade. And we can start, and then let's just go over PM session. I did not trade PM session. I start to trade PM session less, but we can go for it. So PM session, what are we looking for? PM session, right? We're looking for a continuation, right? So overall in lunch, there was actually a decently nice short in lunch. So that we have a 15-minute SIBI, right? We have a 15-minute SIBI. We move off of it. So this is, so we have 15-minute SIBI, right? We have a change in state delivery. This one been a nice short. PM session, right? What are we looking for? We're looking for a key open, which for PM session there's only one, which is actual PM session open. We move higher, right? We do actually have a small double purge here, I believe. I think we do actually. Yeah, we do have a small double purge. We take out this low, right? So this is our double purge. So this is engineered liquidity that we literally just taken. So this would be a 5-minute low, right? So that's what we would target. 5-minute low. We also have, you know, a 5-minute fair value gap, right? So we can do 5-minute fair value gap, right? You can, and so we trade higher. I know there's an SMT. Yeah, there's an SMT here. 1240. Yeah, we have an SMT here. So ideally, NQ is our asset to short because it's clearly weaker. So we have an SMT here. So we have our key level, right? 5-minute sweep, right? We have a 5-minute sweep here. SMT, so we have a sweep out, a low, a high, and we also had SMT. So when price had a SMT, right, we move higher, and then our change in state delivery would be this one candle. It'll be this, so this is our change in state delivery, right? We have a 5-minute fair value gap sitting below. This is actually a great trade, actually. It's a very small risk to reward, right, because our stop loss would probably just be above this high, and then we would probably target this fair value gap. And we would get 1.4, so if I do, you know, just take my stop loss down a little bit, it is a 1.78, right? And we take that 15-minute fair value gap, a 5-minute fair value gap, so we filled that. Next target could be this 5-minute volume imbalance, right? We have this tiny volume imbalance. So we probably could have taken that, put your stops to break even, and then since we have taken that, stops to break even right here, and then we can start trailing our stop loss with institutional order flow, right? So institutional order flow, what we see, down close candles, bang, being respected. Up close candles, since this is a downtrend, up close candles are being respected. Probably would have got stopped somewhere around here because this is a protected swing, right? We trade higher, institutional order flow, right? We trade higher, then trade lower, protected swing. Probably wouldn't have got stopped out somewhere around here, but if you do want to target, you could have held to this volume imbalance right here. And it would have been a great trade overall. PM session was kind of choppy, but I think this was a pretty decent trade. Also 1-minute market maker model, right? Smart money reversal, could have gone in somewhere around here. And you can see we have all this generated liquidity, right? So that's basically it. I just wanted to go over a quick study on what happened in today's markets. I know a lot of people want me to continue making videos, and I will continue to make videos. I've been having a lot of good reviews on classes, and this is just something else I want to experiment with, something else I want to be able to provide in my free YouTube. But yeah, so I hope you guys enjoyed. Hopefully this helped you guys understand why market moved that it did. And once again, make sure to like and subscribe. I'll see you guys next time. Peace.